Hi there, this is the story of Applied Digital, ticker symbol APLD. Right now the market cap is about $9.2 billion and the price $43 per share. Went up in recent months from $5 to over $40. An amazing performance. And now the most important question is whether this company is a great investment at the current valuation. And the answer, you will find it in this box. During this video, I'll open the box and you'll find my answer. Now, here is the thing. To understand that answer, you have to look at their business, what happened, and what's next, right? So you can assess the valuation and the right price to pay. If you look at the revenue over the last 3 years and the first quarter of the fiscal year 2026, 55 million, 146 million, 144 million, and 64 million, an increase year over year. This is great. They have good growth rate, quite high. But when you look at the revenue, 144 million, and compared to the current market cap, you can easily see that it's overvalued. Now, how come the price went up so much? Because if you also look at the earnings, minus 44 million, minus 149 million, minus 241 million, another loss for the first quarter of 2026. So nothing here. Let's check their balance sheet. Cash 74 million, debt over 687 million. So their debt is a huge problem compared to their current revenue and earnings. Revenue is quite low and the earnings are with minus. So debt can be a problem, especially if it goes higher from this level. And the cash is quite low compared to the market cap. So again, nothing there on their balance sheet. So how come the price went up so much? You also have to understand first how they make money. They make money from data centers hosting, 59% of the revenue, and high performance computing hosting, 41%. By the way, before this company, Applied Digital, operated in the crypto industry. They offer their data centers for mining crypto. But they pivot from crypto to AI. And high performance computing is becoming the largest segment, which will deliver more money in the future. So, in one word, they design, build, and operate data centers. This is what they do. Now, the price went up because they announced a deal with CoreWeave, which is backed by NVIDIA. And here is the thing. Pay attention to this. The market expects from this deal 11 billion revenue and 500 million in net operating income. 500 million. And then over the next 5 years, 1 billion in net operating income. So if they deliver 1 billion in net operating income, then yes, the current valuation is very bad. I mean, it's almost already there. But again, you have here two major risks. First risk, you don't know for sure if they can deliver 1 billion in the next 5 years. Because you look at their results, still minus. Some people expect 1 billion, okay, but you don't know for sure. This is just an estimation. Be aware of this factor. This is the main risk. And I can also tell you why they might not be able to deliver 1 billion. Then, the second risk is about the number of shares. Here is the thing. Yes, let's say they deliver 1 billion. Okay, in the next 5 years. 1 billion in net operating income. But here is the trick. If the number of shares doubles, triples from this level, you have dilution. What does it mean? It means the market cap can go up higher from this level and the price down as they increase the number of shares. So your investment can be with minus. Be aware of this risk. And if you check the number of shares over the last 3 years and the first quarter, you can see an increase from 100 million to 200 million to 220, 278. And they are likely to increase this number of shares because they have no profits. And they need money to raise more money from the public market to fund their expenses and invest in their projects, future deals. And they already have a lot of debt, so they can no longer take more debt. The only choice is to raise more money from the public market. And if they do that, current shareholders, will be burned, especially if they buy at this high price. So this is the second risk, and most people don't understand this risk, dilution. I mean, they avoid it. They don't look at it. They look only at the reward, the future 1 billion in net APLD income. Yes, if they deliver this and their growth rate continues, you expect again the revenue to double. Yes, you can have a 2x from this investment. Only if 1 billion they deliver and you have more growth in the revenue. But to have the same return like this from $5 to 30, over 30, is unlikely to happen at this level. I mean, unlikely, low chances. So to open the box and show you the answer, here. The answer is no. In my view, Applied Digital is not a great investment, nor a good one. The current valuation, and when you look at what they do, in my view, is quite a bad one. Now, it's up to you. It's up to you. If you want to invest right now, in my view, you have a high risk if you invest right now. Maybe they will deliver more than 1 billion and you can double your money. But the risk, 50% decline. So if you want to stop losing money and increase your returns, have more than 2x on your investment, simply go to my profile, press join and choose Titan Investor. And there you have access to my portfolio, where my performance over the last 4 years has been 30% a year, annual return, compound annual return. You also get access to an investing course, other in-depth analysis, this means custom-made videos at a request, and access to the previous level, Spartan and Gladiator. So if you want great profits, join my membership and have access to my portfolio, which is available only for a short period of time, by the way. So that's it for this video, and if you have other questions about Applied Digital, please let me know in the comments.